56 to 10. Taxation of gift. Now listen here. 56 to 10 applies only on income from other sources. It does not apply on salary income, does not apply on PGBP income. So if any gift or any asset without consideration or for inadequate consideration is received through employer-employee relationship or in the course or furtherance of business, then you treat it that head. Only if it is not covered in business, not covered in salary, then only you have to see income from other sources, taxation of gift. So refer this section only other than those covered in salary and PGBP. This section is applicable to all SSEs. So individual HUF company, for everyone it is applicable. We are going to see this in three parts. What will happen when the assessee receives cash? What will happen when assessee receives immovable property? What will happen if the assessee receives movable property? First and foremost, cash. Very simple. If the assessee receives cash aggregate of which is more than 50,000, then entire amount is taxable. Sir, but when we learnt salary chapter, I told you about perquisites. Perquisites up to 4,999 only exempt. 5,000 exact taxable. Here 50,000 varaikum exempt. 50,001 onwards only taxable. So exact 50,000 are in the exempt. Okay. Then immovable property. Immovable property means what? Land or building or both. Land or building or both. If immovable property is received without consideration or for inadequate consideration, then if it is received without consideration, let us see stamp duty value. Stamp duty value is more than 50,000. Then stamp duty value is taxable in 56 to 10. If you have received immovable property without consideration, then you should see stamp duty value. If stamp duty value is more than 50,000, fully taxable. What is taxable? Stamp duty value is taxable. Okay. Then because you received free of cost, no. So some figure should be there, no. What is that figure? Stamp duty value. Now, assessee received the asset for inadequate consideration. Inadequate consideration, you should see stamp duty value minus consideration. Stamp duty value minus consideration should exceed 50,000 or 10% of consideration, whichever is higher per transaction. Then the difference will be taxable. See, listen here. This is simple wordings. Take 50,000 or 10% of consideration, whichever is higher. Then compare this with SDV minus consideration. If SDV minus consideration is higher than the higher amount also, then SDV minus consideration is equal to income. If SDV minus consideration is not higher, then there is no income. Basically, you should satisfy the 10% condition also, 50,000 condition also. Okay, wow. If both are satisfying or not, how to do? You just see higher of both. If it is satisfying with the higher amount, then automatically satisfied. So 50,000 or 10% of consideration, whichever is higher. Compare this with SDV minus consideration. If SDV minus consideration is still higher than the higher amount, then take SDV minus consideration as income. If it is not higher, means it is adequate consideration, so there is no income. Okay. Now let's come to movable property. Movable property la JAD pass BS. Here you write V also, BSV. So JAD pass is what? Jewelry, archaeological collection, drawing, painting, any other work of art, sculpture. B for bullion, S for security, and V for virtual digital asset or cryptocurrency. Other than that, if any movable property is received, it is fully exempt. Sir, I received one pen, it is fully exempt. Sir, I received a car, fully exempt. Sir, I received mobile phone, fully exempt. Okay, wow. It is not taxable. Gift is not taxable. Only in these movable assets, gift will be taxable. Jewelry, archaeological collection, drawing, painting, any other work of art, sculpture, bullion, security, virtual digital asset. So in all these cases alone, gift will be taxable. All the other cases, whatever gift is received, how much ever amount it is received, fully exempt. It is not even covered under 56 to 10. Sir, here if it is received without consideration, see the fair market value. Aggregate fair market value of all the assets combined is more than 50,000, then aggregate fair market value is taxable. If for inadequate consideration, if difference between fair market value and consideration exceeds 50,000, then the difference is taxable. First, you should see what difference between fair market value and consideration. Then you add them all. That will be aggregate. Aggregate is more than 50,000 na, aggregate is taxable. Now, exception to gift. For whom and all 56(2)(10) does not apply. In the purchase section will not apply to all these category of persons or all these category of transaction. Number one, section 47, transaction not regarded as transfer. Here you please write certain transaction not regarded as transfer. For example, holding to subsidiary, amalgamating to amalgamated, then partition of HUF. On these transaction and all 56(2)(10) will not apply. Then if any asset is received, money or asset or immovable property received from relatives, it is not taxable under 56(2)(10). Sir, yaar is a relative? Relative means, so enakku na relative adu summa I wrote self. Okay va? Spouse is a relative, brother and sister relative, brother and sister of spouse relative, lineal ascendant, lineal descendant relative, lineal ascendant and lineal descendant of spouse. Lineal ascendant will be separate. Lineal descendant of spouse and the individual is same only. Okay. So of spouse, but still I wrote it here. Lineal ascendant means what? Parents, grandparents, great grandparents of individual also relative, parents, grandparents, great grandparents of spouse also relative, children, grandchildren, great grandchildren of individual also relative, spouse also same only, same children, grandchildren, great grandchildren. Brother or sister of either of parents of individual relative, but not for spouse. Okay, brother or sister. So my mother's brother, mother's sister, father's brother, father's sister also relative. So who and all relative? Spouse, first spouse, brother and sister of individual, brother and sister of spouse, lineal ascendant, lineal descendant of individual, lineal ascendant, lineal descendant of spouse, and then brother or sister of either of parents of individual. So this is covered under relative definition. Now listen carefully. See, if someone is my relative, it is not necessary that I am also their relative. If someone is my relative, it is not necessary that I am also their relative. For example, if the brother and sister of either of parents, means what? Uncle or aunt, mother's brother is giving me gift. In my hand it is exempt. When I am receiving the gift, it is exempt. If I am giving gift to mother's brother, am I covered in relative definition? For them, who am I? Brother's sister's son. Sister's son is not covered. So if I am giving them gift, it will be taxable in their hands under 56(2)(10). Purida? So relationship is not vice versa. If I am someone's relative, not necessary that they are also my relative in income tax. Okay. Next. Gift received on inheritance or will is completely exempt. Gift received on the occasion of marriage is completely exempt, but not marriage anniversary. On the occasion of marriage, sir, is it necessary that I should receive only on the date of marriage? If one day before or one day after if I receive, will it still be exempt? Answer is yes. On the occasion of marriage. So marriage annike kadikanum avasam kadiyadu. Marriage oda occasion kaga kadikanum. It can be received a few days before or after also, not a problem. Gift received on the occasion of marriage from anyone is exempt, but marriage anniversary not exempt. Birthday party not exempt. Okay. Then gift received on contemplation of death. Contemplation of death means what? A person is on deathbed, he knows that he is going to die, that is why before dying he wants to gift some property to some person. This is called contemplation of death. Sir, what if after this he is surviving? That does not matter. Death happens or does not happen does not matter. Contemplation of death is still exempt. Okay. Local authority. Gift received from local authority is fully exempt. Then gift received from individual to a trust created solely for benefit I just forgot to write benefit to, one printing mistake, just a second. Benefit to relative of, benefit to relative of individual. Please change this. So if I am giving a gift to a trust for my relative's benefit, then gift received by trust is exempt. If I am giving gift to trust, for what is this trust for? For benefit of my relative. For example, my son is my relative. I am creating a trust and I am putting funds inside this trust. This trust is for the benefit of my son. Then gift received by trust is exempt. Okay. Then section 1023C. Section 1023C is the exemption section. Earlier it used to be there in your syllabus, now not there. 1023C there is a list of hospitals, university, trust, etc. So if there is an organization which is covered under section 1023C, then if you receive the gift from them, then also exempt. If you give gift to them, then also exempt. Okay. Then in section 12AA, certain religious and charitable trusts are covered. Section 12AA. If an organization is registered under section 12AA, then if they give gift to you, exempt. If you give gift to them, then also exempt. Then others as may be prescribed. Others as may be prescribed, and the government prescribed also. It is relating to COVID-19. Okay, listen. First one is what? If an individual is receiving amount from anyone for the treatment of COVID-19 by an individual from any person in respect of any expenditure actually incurred by him on his medical treatment or treatment of any family member for the illness related to COVID-19. So, if a person was suffering from COVID-19, he got some money, that is gift, from any person he can receive that gift. In such case, some condition should be satisfied. COVID-19 positive report should be there, then proof of treatment should be there within 6 months from the date of being determined as COVID-19 positive. So COVID-19 positive report and then proof that treatment was done within 6 months of the COVID-19 positive report. So in such case, what will happen? The entire treatment expenditure is there, no, which was given as gift by someone else. See, someone sponsored the treatment, COVID-19 treatment of me or of my family. Then in such case, in my hands it is exempt. What is the condition that I should follow? I should give COVID-19 positive report of who was ill, either me or my family member. I should give the positive report and I should give the proof of the treatment, and the treatment should happen within 6 months of the COVID-19 positive report. In such case, it will be completely exempt. The gift received by me, that is the person who has sponsored my treatment, no, it is fully exempt. And it should be given to the income tax department within 9 months from the end of the financial year. Not so important. Next, by a member of the family of a deceased person. So now, because of COVID-19, someone expired. Because of COVID-19, someone expired, and the family member is receiving a gift. Family member is receiving a gift. In such case, if gift is received from the employer, then it is fully exempt. Gift received from employer is fully exempt, and from any other person it is exempt up to 10 lakh rupees. Exempt up to 10 lakh rupees. Ivlo therinja podum. Here I told you, relationship does not mean vice versa, and for HUF, relative is member. For HUF, member is the relative. Now listen here. Here also same concept. Stamp duty value. Stamp duty value you are taking, no. You should take when it is without consideration or for inadequate consideration, then 56(2)(10) will get triggered. Correct? Now registration is done. Then generally registration and agreement date are same. However, if they are different and stamp duty value is also different in both the dates, generally you should take what? Registration date. But on or before the agreement date, if you have paid any money through account pay check, account pay bank draft or electronic clearing system, then you can take the agreement date also. Stamp duty value on agreement date also. And here also that valuation officer and all is there. Answer is yes. In 56(2)(10) also, if I am not satisfied with stamp duty value, I will go to assessing officer. Assessing officer will transfer case to valuation officer. Valuation officer can increase SDV or decrease SDV. Increase SDV na, ignore it. decrease SDV na take the benefit. Okay. This I already told you. Amount taxed under section 56.210 will become the cost of the assessee for future capital gain calculation. Okay. Next, 56.211. All small adjustments only in income from other sources. Only one big concept, that is deemed income. That is also very simple. So 56.211. Compensation on termination of employment. Compensation on termination of employment. Sir, compensation on termination of employment already while studying the salary chapter, we learned profit in lieu of salary, where we learned compensation on termination of employment is taxable under salary head of income. Then why is it also given in PGBP head of income from other sources? Let me tell you. Before 2 years this section was not there. Before 3 years this section was not there. At that time what happened, I am telling you. Practically what happened. Now Mr. C is employed under Mr. B. Mr. C is employee, Mr. B is employer. Now Mr. A wants to be the new employer. He wants to recruit Mr. C in his organization. So he gave Mr. C a compensation of 10 lakhs. Compensation of 10 lakhs to Mr. C, that you quit the organization of Mr. B and you come and join my organization. In such case, it is taxable under salary chapter. Why? Because there is employer-employee relationship between Mr. A and Mr. C. Mr. A, to establish that employer-employee relationship, only giving this 10 lakh rupees. So is there employer-employee relationship? Answer is yes, it is there. Hence, it will be taxable under salary head of income. But you know what happened? Mr. A is there, no? He gave compensation of 10 lakhs to Mr. C and he told, you just quit B's organization. You don't come and join me. You just quit B's organization, that is enough. In such case, is there any employer-employee relationship? Answer is no. Now, between Mr. A and Mr. C, there is no employer-employee relationship. Hence, this cannot be taxed in salary chapter. Next, section 56.213. This we will discuss, very long discussion. We will discuss along with deduction chapter when we are learning the 80C deduction. Now, let us see taxation of dividend. Taxation of dividend. See Kanna, earlier dividend was an exempt income. It used to be exempt income, but now it has become taxable income. So dividend whatever is received is fully taxable. At what tax rate? The normal tax rate. But however, there is a limit on surcharge of dividend, 15%. This we already studied. Normal dividend, not a problem at all. You will easily be able to identify and find out the tax. Then what is difficult? Deemed dividend. That is also not that difficult. Let us see what are the provisions of deemed dividend. So all deemed dividend discussed below are deemed to be dividend only to the extent of accumulated profit. Profit only a company can give as dividend, no. Now we are going to see 6 cases where a company, when they are giving some distribution to shareholder or they are giving any asset or amount to shareholder, generally it is not considered as dividend, but it is deemed as dividend in the Income Tax Act. The company is giving asset or money to shareholder. Generally it is not considered as dividend, but in income tax it is considered as dividend. But income tax, while considering as dividend, it has told that only to the extent of accumulated profit of the company we will consider it as dividend. Okay, wow. Now first, section 222A, A for asset. So if any asset is distributed to shareholders to the extent of accumulated profit, it will be considered as deemed dividend in the hands of shareholders. So if any asset is given to shareholder in the hands of shareholder, it is what? Deemed dividend. Next, section 222B. Section 222B says that any distribution of debenture stock or deposit certificate from a company to its shareholder. So company is giving debenture stock, deposit certificate free of cost to its shareholder. In such case, it will be considered as deemed dividend. Then any distribution of bonus shares to preference shareholders. Bonus shares to preference shareholders. Bonus share to equity shareholder is not deemed dividend. Bonus share to preference shareholder is only deemed dividend. Because bonus share, if it is given to equity shareholder, no, we have already learnt, take the value of bonus share as nil. If before 1/4/2001, take the fair market value. If before 1/2/2018, then take the fair market value for 112A calculation. Okay. Then both about to the extent of accumulated profit. So what did I tell? Bonus to preference shareholder, bonus share to preference shareholder, and distribution of debenture stock deposit certificate to shareholder. Next, C, 222C. This we have already covered when I took liquidation. Okay, liquidation in capital gain chapter. I told you when a company is liquidating or closing down, C for close, C for closing down. When the company is closing down, it will distribute its asset to the shareholder. So to the extent of accumulated profit, it will be considered as deemed dividend in the hands of shareholder. Next, section 222D, D for decrease in share capital. So any distribution by a company to its shareholder by way of reduction of share capital to the extent of accumulated profit. For example, the share value in the company was 10 rupees. They reduced it to 2 rupees and balance 8 rupees is there, no, they distributed to shareholders. The share value was 10 rupees. They reduced it to 2 rupees. The difference 8 rupees is there, no, this they distributed to shareholders. This is called reduction in share capital. This is also deemed dividend in the hands of shareholder. Deemed dividend in the hands of shareholder. Next, 222E. 222E. இங்க என்ன போடணும்னு தெரியல, சோ அதனால சும்மா ஏதோ okay. 222E. Now 222E is a little bit different. So here, what is deemed dividend? Let me tell you. When a closely held company or unlisted company, closely held nale unlisted ne vechkonga, don't go very deep into the meaning. When a closely held company or unlisted company is there, it is giving loan or advance to its shareholder, and such shareholder has 10% or more voting power. When the closely held company or unlisted company is giving loan or advance to the shareholder, and such shareholder is having 10% or more voting power, in such case the loan or advance given will be treated as deemed dividend in the hands of shareholder. So shareholder kaila idu enna deemed dividend. Sir, but the company gave loan. Yes, still it is deemed dividend. But the company is charging interest, sir. Still it is deemed dividend. But the loan is repaid, sir. Still it is deemed dividend. Purida? Company is giving loan to shareholder. The shareholder is having 10% or more voting power. In such case, this loan will be treated as deemed dividend in the hand of shareholder. But what if there is interest on loan? Still it will be considered as dividend. What if the loan is repaid? Still it will be considered as dividend. Okay, but listen. Okay, now Income Tax Act, you considered as deemed dividend, no? Now while giving actual dividend, I will adjust the dividend that is being given by the company with this loan. Can I do it? Answer is yes. That you do, no problem. Then once again dividend mala tax kadayadu. Purinjada? First loan kudukranga. This loan is treated as deemed dividend. Now they are giving actual dividend. But because income tax treated it as deemed dividend, no. So they are adjusting that dividend with this dividend. Can they do it? Answer is yes. They can do it. Second time, once again, no need to tax. Now, one more. If the loan or advance is given to any concern where such shareholder is having substantial interest, and this loan is given for the benefit of this shareholder, then also it will be considered as deemed dividend. This closely held company or unlisted company is giving loan or advance to any concern where the shareholder is having substantial interest. This loan is given for the benefit of this shareholder. Loan or advance is given for benefit of shareholder. Benefit of shareholder. In such case also, it will be considered as deemed dividend. Then loan is given to any other person for the benefit or on behalf of shareholder, then also it will be considered as deemed dividend. So substantial interest irinda, if they are getting loan, then also deemed dividend. If loan is given to any other person for the benefit of the shareholder, then also it is considered as deemed dividend. To any other person, it will be treated as deemed dividend in the hands of shareholder itself. Directly to shareholder also deemed dividend in the hands of shareholder. However, given to substantial interest concern, deemed dividend in the hands of that particular concern. Okay. Then what is substantial interest? Same, 20% or more voting share, 20% or more profit share. But listen, for this condition, for directly giving to the shareholder, it is not substantial interest. It is 10% or more voting power. Okay, so if shareholder is having 10% of more voting power. But sir, the company which is giving loan itself is a banking company or money lending business, doing money lending business, giving loan in ordinary course of business, then it is allowed. Answer is yes, then it is allowed. If the company giving the loan is in the money lending business and it is giving loan in the ordinary course of business, then it is allowed. Then it is not deemed as dividend. Okay. Here concern means HUF, AFOM, AOP, BY. If even his loan is repaid or interest is charged at market rate, it will not make any difference. Then any dividend paid by the company later on can be set off against above loan. Then 222F we have already discussed when we discussed buyback. Whenever there is buyback from 1/10/2024 onwards, when the company is giving the amount for buyback, this amount will be treated as deemed dividend under section 222F. Then the full value of consideration for the shares will be considered as 0. The difference will be considered as capital loss. Okay, we already discussed. Then exceptions not that important. நீங்க அப்புறமேல் ஒரு ரீடிங் கொடுத்துடலாம். Then 115 BB, tax on casual income. Tax on casual income. Sir, what is casual income? Casual income means lottery, crossword puzzle, horse race, card game, any other game of any sort, any form of gambling or betting other than online game. Sir, why other than online game? Because adukku oru thani section irukku. Okay. On this, what is the tax rate? 30% tax. Then health and education surcharge and all, as usual it will be applicable. Then no expenses allowed as deduction, no loss is allowed to be set off, no deduction under chapter 6A is allowed. You cannot use the basic exemption limit also. But can you use the rebate? Can you use the rebate? Yes, you can use rebate. Rebate only one section you cannot use. 112A. 112A is the only section where you cannot use rebate. Meedi in the section la even undisclosed source winnings wherever you want you can use the rebate. That is getting the discount of 12,500 or up to 25,000 as the case may be. Old scheme or new scheme. Old scheme la 12,500 maximum rebate. New scheme la 25,000 maximum rebate. That is not allowed only in case of 112A income. Meedi ella income la rebate is allowed. Okay. Then section 115 BBJ. Tax on online games. This section applies to winning from online game. Online game na enna? A game that is offered on the internet and is accessible by a user through a computer resource including any telecommunication device. It means what? Mobile la vilayadala, computer la vilayadala, internet moolama vilayaduvanga. That is called online game. What is the tax rate? Flat 30% tax. We have already discussed. Flat 30% tax. No expenses allowed, no losses allowed to be set off, no deduction under chapter 6A, no basic exemption limit is allowed. Okay. Then, sir, what about rent? Is rent taxable under income from other sources? Answer is, if it is not covered under house property and PGBP, it will be taxable under income from other sources. Generally, what will happen? PGBP, house property, you should be the owner of the property, correct? Only then it will be taxable under house property chapter. Sir, what if I am not the owner? I have taken on rent and I am subletting the house. In such case, it will be taxable under income from other sources, if it is not the business. Next, keyman insurance policy, I already told you, received by employer PGBP, received by employee salary, received by any other person, taxable under income from other sources. If director is getting remuneration from board meeting, sitting fees, etc., then this is also taxable under income from other sources. Next, if I am chosen as a paper setter or paper checker for CA examination, is it my business? Answer is no. So the income that I receive will be taxable under income from other sources. I am going to the institute and taking seminar. For this taking seminar, I am getting some seminar fees. Is it taxable under business? Answer is no. It will be taxable under income from other sources. because taking seminar is not my business. Okay, then. But if if I am employed in an organization, and then if I am taking a seminar and my employer is paying me the seminar fees, then it is taxable under salary chapter, because there is employer-employee relationship. Okay. Then family pension. If family pension is received by the family member of the gallantry award recipient, oh, exemption chapter where edukliye, that is also remaining, that also we will learn. Okay. Exemptions generally it is given in that chapter, but in my material it is given together. Certain exemptions are given together as a exemption chapter. Easy only, neenga reading pannale ungalku purinjirum, but still if time persists we will take that also. So if any pension is given to recipient of family of the recipient of gallantry awards, okay, Paramveer Chakra, Veer Chakra, Mahavir Chakra, and they are government employee, then that family pension is fully exempt. Other than that, family pension is taxable. When family pension is taxable, it is taxable under income from other sources, because family ka business kadayadu pension vaangiradhu. Then there is a deduction available. What is the deduction? 1/3 of family pension or 15,000 per annum. So maximum 15,000, avladhan. 15,000 per annum, whichever is lower. Take 1/3 or 15,000 per annum, whichever is lower. And if it is the new scheme, 25,000. 25,000. So 15,000 per annum old scheme, 25,000 per annum new scheme. I told you, no, there are only 3 places where there is benefit for new scheme. This is the second example. First example, standard deduction. Second example, family pension. Next. Third example also I think we already saw. 80 CCD subsection 2, employer contribution in pension scheme. Again we are going to see, no problem. If arrear family pension is received, 89 relief is available. Not that important, you can ignore. Now, this we already covered. Interest on compensation or enhanced compensation on compulsory acquisition. Interest on compensation or enhanced compensation on compulsory acquisition. If it is received, then it is taxable under IFOS, and standard deduction of 50% is available. Standard deduction 50%. Then interest on gold deposit bond, not taxable. I already told you, capital gain chapter edukumbodhu capital asset definition la gold deposit bond 1999, gold monetization scheme 2015. Interest on such gold deposit bond or gold monetization scheme fully exempt. National plan certificate fully exempt. Capital investment bond fully exempt. Relief bond of RBI fully exempt. Interest paid to non-resident by a IFSC unit is fully exempt in the hands of non-resident. If IFSC unit is paying interest to non-resident, then in the hands of non-resident it is fully exempt. Then what? PPF also, PPF interest exempt. Sukanya Samriddhi exempt. Exempt. Listen, post office saving bank account. Post office saving bank account also interest is exempt up to how much rupees? 3,500 in case of individual account, 7,000 rupee in case of joint account. 3,500 in case of individual account, 7,000 in case of joint account. Interest is exempt. Now listen here, in post office saving bank account, no, it is a saving bank account in post office, but for this saving bank account 3,500 per annum is allowed as exempt. It is exempt. Hence you will also see that in deduction chapter that there is a deduction under section 80 TTA and 80 TTB. So first claim exemption, balance amount mele you claim deduction. Okay, exemption வந்து எப்போ claim பண்ணுவீங்க? While computing total income itself, you can put saving bank interest is equal to 5,000 minus exempt saving bank interest is equal to 3,500, balance 1,500. This 1,500 also, if you are in the old scheme, then you can put deduction under section 80 TTA 1,500 fully you can claim. Okay. Any other interest is taxable normally. Income from UTI mutual fund also is taxable. Next, deductions available in income from other sources chapter. Deductions available. So if a income from other sources is taxable, then if there is any expense relating to such income, it is allowed as deduction. But if an income is exempt, not allowed as deduction. Interest on compensation on compulsory acquisition, 50% is allowed as deduction. 50% taxable, 50% deduction. Family pension, 1/3 or 15,000, whichever is lower, 25,000 or 1/3, whichever is lower, will be allowed as deduction, as the case may be. Winnings, no deduction. Then dividend income other than 222F or income from units of mutual fund referred to section 1023D or income from unit of specified company referred to under section 1035. Now listen here. Dividend income other than 222F dividend, other than 1023D income, other than 1035 income. இந்த ரெண்டு income வந்து exempt இருக்கு, அதனால அதுக்கு against deduction கிடையாது. மீதி all dividends are there, no? Even if it is deemed dividend, you can claim a deduction. What is a deduction? Interest which is given to earn this dividend. For example, I took interest of 1 crore. I invested in ITC shares. And let's say I got 25,000 shares. 25,000 shares, correct? 25,000 shares using 1 crore rupees. Now for this 1 crore, I am paying a interest of 10 lakh rupees per annum. 10 lakh rupees per annum. From ITC shares, I am getting dividend of 8 rupees per share. So 25,000 multiplied by 8 is equal to 2 lakh rupees. 2 lakh rupees. So now listen carefully. To earn this dividend only, I took the loan. 1 crore rupees loan I had taken to earn this dividend. Hence, interest on such loan will be allowed as expense. Interest on such loan will be allowed as expense. But listen, this entire 10 lakhs, can I get as expense? Answer is no. Entire 10 lakhs is not allowed. Maximum how much allowed? 20% of dividend. So 2 lakhs into 20% is what? 40,000. So 10 lakhs per annum or 40,000, whichever is lower, will be allowed as expense. Purida? So 10 lakh per annum or 40,000, whichever is lower, will be allowed as expense. Hence 40,000 will be allowed as expense. Balance will be taxable. 80% will be taxable. Any other expense other than interest not allowed against dividend income. So dividend income irunda interest mattumda allowed. Vera endha expense allowed kadiyadu. Adu kuda maximum evlo interest allowed? Maximum 20% of dividend income. Ada taandu kudadu. Okay. Hope you are clear. Then disallowances similar to PGBP. Payment to resident without TDS na 30% is disallowed. Payment to non-resident na fully disallowed. Whenever it is paid, in that year it will be allowed. If payment is made to related party na excess payment irunda not allowed. Reasonable payment varaikum allowed. Excess not allowed. Then 10,000 to a person in a day not allowed as deduction. Then here also deemed profit. Last year la expense allow ஆயிருச்சு, but இந்த வருஷத்துல என்ன தெரிஞ்சது? It is not allowed. So you treat it as deemed income. Okay. Then personal expense allowed, personal expense not allowed as deduction. Salary received by MP MLA is taxable under income from other sources, but section 1017 says that the daily and constituency allowance is exempt. Daily allowance, constituency allowance is exempt as per section 1017. Other than daily allowance and constituency allowance will be taxable under income from other sources. Awards other than exempt awards will be taxable under income from other sources. Agriculture and income from outside India will be taxable under income from other sources. Agriculture in India na exempt, outside India na taxable. And royalty is always taxable under income from other source. Dividend is always taxable under income from other source. So royalty pathale IFOS, dividend pathale IFOS. Question la, don't even think whether it is the business or not. Directly take it in income from other sources. Advance money forfeited on or after 1/4/2014 is taxable under income from other sources. Okay. So with this we have completed the income from other sources chapter other than taxation of life insurance.